G'day, Rudy here, and welcome to the end of week review of the King MVR. Welcome if this is your first time. So before we get into the ETF, the theory behind it, why he's the king, it's all because of this commodity cycle. That's why they say mining commodities is cyclical, because they are. This is since the 1800s. Up and down, up and down, up and down, and here we are here in this long-term scheme of things. Okay, so this part here we now have electronic data for. So this chart here is this here. So you can see we're forming a lovely what's called in charting a cup and handle, which is a bullish pattern. It's just as a basket of commodities put together, and you can see we're still. So this is like, well, they say to 2045, so that's 20 years. So I'm just saying, at least for the next 5, probably 10, probably 15, probably 20. We're just at the beginning of it. Okay, so all right. So before we get into the charts of the king, we'll just have a look at, so basically it's made up of 31 mining related companies. So the highest weighting is 8% to Woodside, so your BHP, Fortescue, Rio. We'll go through each of these companies, and then you Pilbara, 3%, 2%. You get down the bottom, it's like 1%. So a whole spread of mining services, mining companies. So we'll go through them. So this is the king. So I still have a I don't know, short to medium term target of up here at 45, and longer term up here at 50 for him to get there. Just go to a weekly chart so we can see the nice week he had. So he's performing as he should. He's broken, consolidation, then up. That's the bullish move. Up, consolidation, up. Okay, so how's he going against the competitors? Okay, the king over Vaz. I would say the king has Vaz in the bag. I've had a number of people say they've done the conversion therapy and switched all their Vaz VGS to the king and the ninjas, or the tank and the ninjas. I'll get into that philosophy of the portfolio I reckon you should have later. MVR over MVB, so over the banks. So he hasn't got the banks yet, but that's a big base he's forming there. So I can give him another week, and he'll have the banks done too. MVR over VGS, the other combo deal. So he's been outperforming really since April. So if that was a share and you'd buy it, then you're agreeing MVR is going to beat VGS. MVR over IVV, so the S&P 500. The king again's been winning since April. He's done the breakout, done the comeback retest. Give him another week to put a nail in the coffin. And then obviously the king of them all, the king versus king, MVR over the Nasdaq. So it's broken out, did a retest. So we need another week probably to put the nail in the coffin. So MVR, he's what I call the tank. I'll get into that at the end. So he's not the be all and end all. He's just solid 4% div paying, going to outperform everybody else. And then there's other ETFs you add for exposure, for growth. Okay, so who's in there? Okay, so we got obviously we need to look at commodity prices because that's what drives the shares. So the oil price, so it's just found some support down here and just trying to get over this resistance line here. So a clear break should mean there's a, or at least a short to mid-term bottom in the oil price, which you can see long term we're not at the highs, long way from the highs. Natural gas, so similar, broken the declining wedge here, so it might come back for a little bit then go up. Let me get rid of those. Okay, so natural gas, again we're buying things at the bottom commodity cycle, not the top of the commodity cycle. So the king's doing all this without booming commodities. So the Woodside, so Woodside's found a bottom down here, I reckon. So he's the highest weighting, 8%. Again, when we're buying this, we're buying at the bottom, we're not buying at the top. And he pays a nice 7.2 div. Okay, so then we've got copper. This is copper's a bit different. So yes, you could say we're at the top of the range, but we're been squeezing since 21, so five and a bit years squeezing in this range here. So when you squeeze, you break out. So we're buying at the bottom of this later cycle, and the same with iron ore. Go to a weekly chart. So again, where iron ore is at the bottom of the range, but our iron ore miners are pretty low cost miners, so they can still make money. So the two, so iron ore and copper, that's BHP's main game. So you can see it's been going sideways again since for the last 5 years, hasn't done anything. Broke the Iron Dome, it's now breaking this declining wedge with a nice weekly green candle. Fortescue, so they're a pure iron ore miner. Again, bottom of the range. So this is where all this growth in MVR is going to come, when eventually it all starts coming up here again. So again, bottom of the range. Rio, so they're another copper iron ore. Bit more iron ore than BHP. But again, you can see they've broken out through that declining line there. Santos, so they're oil and gas, pretty much the same as Woodside. A little bit more gas. So again, we're buying at the bottom of the range, bottom of support. Origin. Okay, so they're just nicely moving up and up. There's no bottom of the range there, that's okay. You do need something that's going up at this stage. Orica, so they're your explosive, blow up the land to find the commodities. So it's pretty volatile there, isn't it? But that's the reason you have an ETF, because you just throw them all together and they form that beautiful chart that we had at the beginning. Anyway, they're just finding support at resistance. Okay, one of my favourite metals, gold. Gold in Aussie dollars. We're not buying at the top of the range here. Look at that. It's beautiful. Gold's just going to keep going up. It's real money. As the governments print more, this will keep going up more. So in the ETF we've got Northern Star. That's our biggest pure gold producer. So with the gold price taking out all that, these, so it's going to keep going. Okay, Okay, coal price. So again, you can see bottom of the range. So just these are weekly candles we're looking at. So bouncing off the bottom. So the declining wedge to break, come back, retest support line. This one I don't like. It's like a family gathering and you don't like your cousin. That's what this guy is, Sol Patterson's. He's not a miner, he's a listed investment company, but he owns about 60% of New Hope Corporation, which is a coal mining company. Anyway, they're merging and hopefully we'll say goodbye to them. Anyway, that's Sol Pats. Then we've got Whitehaven Coal, a proper coal mining stock. So they came back and tested support here, so that looks fine. Okay, aluminium. So aluminium's just been range bound quite a while. Then you got alumina. That's right at the bottom of the range. Whereas zinc, beautiful, broken out of the squeeze here and just consolidating nicely sideways. Lead, again, just pretty much a sideways commodity there, and those commodities feed through to this guy, South 32. So you can see South 32's at the bottom of that trend line there, and making a nice little double bottom. So again, we're buying at the bottom. Evolution, they're a copper and gold miner. So they're up and away. So we're not buying our gold stocks at the bottom, but they're the ones that have been doing the heavy lifting for now until the big boys do something. Linus, so they're a rare earths miner. So this is that cup and handle pattern on the commodity chart we saw at the beginning. So this is what I expect commodity prices to do. See, once they break, whew, look at that, beautiful. So these are ninja type. There's ETFs where you can get a whole bunch of these rare earth stocks in them. Whirly, so they're global engineering in the mining space. So they didn't have enough energy to break through, so they're probably coming back, find some support and have another go. Ampol, okay, so they've got a bit of a deformed cup and handle. That's a very similar pattern to our king. You can see there that broadening, declining wedge. Okay, back to it, Rudy. Come on. See, same. So that's what so this is where the king is at the moment. This candle here. So lithium. So look at where lithium used to be. It used to be up here. So we are at the bottom. We've broken. I'm expecting it to come down a bit and do a retest, but it hasn't yet. But it doesn't matter because Pilbara Minerals, they're a lithium miner. They've broken that declining wedge. You can see just sideways up. And this is when we talk about ninjas, about the type of volatility that you get. You get good return here, but you get a bit of volatility. But that's just once it breaks there, then up here is the next resistance. Then we got Perseus. Okay, gold miner. Beautiful. Look at that, up and away. You're going to start a new channel now. Capricorn. Up and away. Horizon, they're Australia's largest rail freight operator. So they've broken the declining wedge, consolidate at support. So you can see we're buying all these things at the bottom except for gold stocks, and that's another reason resources are going to boom, because gold always leads. Mineral resources, they're a bit of a mining services, iron ore and a bit of lithium thrown in together. So they're up and away. Sandfire, copper mining. So they're off and away. Regis. So that's that's at resistance. But remember where the gold price at this time was down here, and it's done this. So the gold stocks were extremely undervalued, underloved. The poor little things. Okay, so he's had a good run. He might need to have a breath, come back, and then go for there. Anyway, Genesis, another gold stock. So these have less and less weightings though. If this was like the weightings of Woodside and BHP, the ETF would look a lot more like this. And that's what the ninjas are for. We'll get to that at the end. Aluka. So they're a bit of a mineral sand, sort of in that rare earths bucket. So broken, consolidation up. I'll just do the same thing, consolidation up. Beach, so oil and gas, buying at the bottom. IGO, so they're a bit of lithium and a bit of nickel and a bit of refinery work. So again at the bottom. Okay, the one that Elbow doesn't want us to have, nuclear, the one that the rest of the world uses but we don't. Look at that, break, come back, support, bang, off she goes. So we've only got the one uranium miner in here, that's Palladium. There's an ETF that has a whole bunch of them in there. It's a ninja ETF. Anyway, we've been trying to buy it every time it comes down, buy. So that's doing fine. Monadelphous, so they're mining services. So still haven't reached their all-time highs, but cleared these ones. So that's where mining companies, they don't want to employ their own staff. They get these guys to come and do stuff on their mines. Deterra Royalty. So they, I don't know, don't know what happened this week there, but they basically don't do much. They a royalty company, so they provide money to companies to help build their mines, and then they get a percent of the the sales. They get a lot of their money from BHP's iron ore operations. Nice div, having a bit of a wobble down here. That's fine. Build up some energy and then have another go. And last one on the list is Liontown. Okay, so they're another lithium miner, and you can see that consolidation, building to move up. Alright, so there are all the stocks that go into the king, or the tank. Now what I'll do is, if you're interested in how I would construct a portfolio around MVR, whether you're looking for income or for growth, have a listen to this. Okay, putting the portfolio together by Rooster Productions. Okay, so how I see it is, think of it, it's a war game. So the objective is to destroy the enemy who live in the castle, and they've got riches in the castle. So the first decision is, what type of attack will I do? That basically depends on, do I want the riches in the castle? So basically, if you say yes, you want the riches, then you're saying you want high growth. If you don't want the riches, just means you want income with a bit of growth above inflation. Okay, Alright, so you decided you want the riches. So the plan of attack, you're going to need a tank to destroy the castle, and then some ninjas to go and steal the riches. Okay. Alright, so the tank is MVR, so he just sits in the background there and drops his bombs, throws his missiles into the castle. So he doesn't get his hands dirty really, but he does good hard chunk of it. And then you're going to need some ninjas. So these ninjas do a dangerous job, obviously, because they're going into the castle. So there's two types of ninjas. There's ASX ninjas. So there's ETFs like XMET, which is a sort of, it's got a whole lot of copper, rare earths, lithium, silver miners in there. It's not bad. Uranium miners, your gold miners, your silver ETF, your copper miners, your small companies ETF, like a defense tech ETF, or any of your own growth ideas or shares that you might have. Then we've got some special US based ninjas. So these are which you can't get on the ASX, so these guys do a bit more of a powerful job than the ASX ones. So we've got your rare earth ETF, a uranium ETF, but these are the large caps, these are the medium cap uranium miners. SilJ, which is your silver miners, you get a little bit of them in XMET. GDXJ, which is your mid-tier gold producers. Miners is your senior gold producers. So in a bull market, the mediums outpace the seniors. So that's why I say they've got special growth powers. And LitP, which is a lithium ETF. You get a bit of lithium in there, but you get more depth. So in here, for example, in XMET, you might get 1 or 2 companies in lithium, whereas in here you get about 30. Okay. Alright, so what percent of tank and ninjas should I use? Alright, well, so ultimate risk, like game on, I'll take anything. Alright, then you just go with no tank and just ninjas. Okay, you just go all in. So it can be done. I do have a subscriber who's done the just ninjas, and he in his first month he got a bit nervous because it dropped 10% in a week. Now he's laughing, but ninjas do a dangerous job. So if you're going to have ninja, you're going to expect, a week one of those ninjas could drop 10% in a week. Let's just set that. That's how dangerous the job is. But in a bull market, I expect them to come back like that sub did. He was in Remex, the rare earth one. Now he's up about 30 or 40%. Or you can go medium risk, okay? So that would be a 50-50 job, 50 tank, 50 ninjas. Or you can go low risk, but not low risk as in cash, but that would be just the tank. But I'm still, when you go the tank, I'm still expecting the tank to outperform VAS, VGS, IVV. So it's not, it's not low risk like in the bank. There's still volatility, but the tank isn't going to drop 10% in a week. Okay, so you've got to sort of work out your risk profile there. I don't want to be given personal advice around, what. The rooster, I'll get in trouble from the rooster. He's my compliance officer. All right, or you decided, okay, I don't want the riches. I've got enough money. I don't need to make 30-40% in a year. I'm just exaggerating, but these ninjas I expect to make it at least 10-20% per annum. I mean, a lot of them are up all that in 6 months. But it's, nothing's guaranteed. It's a dangerous job. You get reward for the risk you take. All right, so you're still going to need a tank to destroy the castle, because you've got to do some work. But you're going to need some drinking buddies. Just sit in the tank with you. So your drinking buddies are like your VHY, SYI, so dividend ETFs, ASX 300 div shares, property trusts. Okay, so in this scenario, what percent of tank and drinking buddies? Well, I'm thinking, like, if you're on ultimate income, then you go like 30% tank, because the tank's going to pay you a 4% div. So you can put that in the bank. And then say 70% drinking buddies, who'll pay you, I don't know, 6%. So that you still got you could just have drinking buddies, but they'll drink too much and they won't do any work. So the tanks, the growth performance of the tank will outperform the drinking buddies. Okay, because the tank's going to outperform VAS, and VAS is sort of the banks and your drinking buddies. Okay, so all right, or you want a good income but a bit of extra growth. So you set the bench, say 50% tank and 50% drinking buddies. All right, so that's just a framework. And each weekend I go through, do a video on the dividend shares and ETFs, and I do a video on all the ninjas. All right, hope you enjoyed that. Let us know your thoughts. See ya.